Welcome back to Explain the Charts, everyone. Today, August 6th, 2025, we're putting one of the market's most talked about stocks under the microscope, Meta Platforms, ticker Meta. The buzz around Meta is primarily driven by its massive investments in artificial intelligence, a narrative that has fueled significant analyst optimism. Recent Google searches for Meta stock news reveal a generally positive sentiment, with analysts raising price targets to levels like $900 or even $1,000 per share. Many consider Meta a top AI beneficiary, pouring billions into AI infrastructure with plans for $66 to $72 billion in capital expenditures for 2025. This aggressive AI strategy appears to be yielding early results, boosting user engagement, improving content discovery, and significantly enhancing advertising performance across Meta's family of apps. Q2 revenue, reported recently, was a blowout, exceeding analyst expectations, further reinforcing this positive outlook. However, not all news is without caution. A U.S. judge recently rejected Meta's attempt to dismiss a lawsuit over scam advertisements. Additionally, the company delayed the launch of its AI chatbot in Europe due to regulatory concerns, reminding us of potential headwinds. Despite these issues, the overall market sentiment for Meta's long-term AI-driven growth remains positive. Now, let's turn our attention to the charts to see how these events have impacted Meta's price action. Looking at the daily chart, we can clearly see a strong bullish trend that has been in place for over a year, with the stock gaining more than 56%. Observe the massive price surge around late July and early August 2025. This dramatic upward movement, characterized by a significant gap up, directly correlates with the recent blowout Q2 earnings report. This move pushed the stock to new all-time highs, showcasing the market's strong reaction to the positive financial results and AI narrative. Prior to this surge, you can spot a consolidation phase around the $700 level. This level, which previously acted as resistance, has now convincingly been broken, transforming it into a new psychological support. Zooming into the 1-hour chart, specifically the recent days leading up to today, August 6th, we see the immediate aftermath of that powerful rally. The stock rallied from around $700 on July 29th to highs near $784.75 on July 31st, marking a substantial short-term gain. This rapid ascent indicates strong buying interest and bullish momentum following the earnings announcement. The price action on August 5th, as seen on the 15-minute chart, reveals a slight pullback and consolidation within the current trading range of $763 to $783. This is natural after such a strong move, as some profit-taking occurs and the market digests the new price levels. Immediate support for Meta appears to be around the $760 to $763 area, where the price has found some stability today. On the upside, the all-time high of $784.75, reached on July 31st, stands as the immediate resistance. A decisive break above this level, ideally on higher volume, would signal a continuation of the strong uptrend. From a short-term perspective, we could see Meta continue to consolidate around these levels. If the $760 to $763 support holds, traders might look for bullish entry points targeting a retest of the $785 resistance. However, a sustained break below $760 could indicate a deeper pullback, potentially towards the $750 or even $745 levels. Long-term, the bullish case for Meta is compelling, primarily driven by its AI initiatives and strong user engagement. Analysts project targets well above current prices, suggesting significant upside if the company executes on its AI vision and mitigates regulatory risks. The stock has shown resilience in previous pullbacks on the daily chart, often finding new support levels and continuing its ascent. Conversely, the bearish argument hinges on concerns about the high capital expenditure impacting profit margins and the ongoing regulatory pressures. A failure to meet future earnings expectations or adverse regulatory decisions could trigger sharp reversals. For traders, watching for reversals at key resistance zones or breakdowns of support on increasing volume will be crucial. To summarize, Meta currently trades around the $763 to $783 range, with immediate support at $760 to $763 and all-time high resistance at $784.75. A breakout above $785 is highly likely, potentially leading to a rapid move towards the psychological $800 mark. Beyond that, analyst targets suggest potential for $900 to $1,000, contingent on continued strong AI performance and favorable regulatory developments. Conversely, a break below $760 could see a retest of $750 or $745, though the long-term trend remains firmly positive. Key things to watch for include Meta's ongoing AI product launches, any further developments in the scam ad lawsuit, and the European chatbot regulatory process. As always, monitor overall market sentiment and volume trends to confirm any moves. That's all for today's Explain the Charts. Make sure to like and subscribe for more in-depth analyses, and we'll see you in the next video.